Buy what you know. It's one of Warren Buffett's biggest pieces of advice for investors. He told Berkshire Hathaway shareholders way back in 1996 that they should invest in companies within their circle of competence. That is, businesses that they understand. By that logic, household names like Chipotle, PepsiCo, and Lululemon would be great fits for your portfolio potentially. Right or wrong? That's the question. Here to discuss, we've got Nick Yeomans, who is the Yeomans Consulting Group financial advisor and president. Nick, what are the pros to investing in names that you know, as Warren Buffett would say?
I think we start with familiarity, right? I mean, if it's a familiar brand, you can know it. Many of us know, touch, taste, from, you mentioned Chipotle or going even down to Home Depot every weekend. I mean, those are familiar brands, and you build loyalty and trust, and you kind of see what those consumer trends are when you're familiar with that brand. So those are the pros. I mean, you can really know the brand because you trust the brand.
And so what about the cons of using that as kind of your decision mechanism for which companies you want to invest in?
Yeah, and I think that's the most important part of this conversation is familiarity does not equal strength. Okay, just because we know a brand doesn't mean that we necessarily should trust that it's good investment. I can enjoy a company all day long. It doesn't mean I need to invest in that company. So we need to think forward, like today. What's the impact from inflation? What's the impact from the tariffs talks? What are potential supply chain issues? I mean, we really have to think deeper beyond our loyalty and our trust in the brand, and we have to understand those fundamentals. It all comes back to the basics.
And so with that in mind, what are three things investors should keep in mind before purchasing a security, a stock?
Yeah, well, I think the first thing is, what's the financial health of the company? Going back to the basics. What does their balance sheet look like? What do the forecasts look like? What was the last quarter's profit call? I mean, we saw recently with Tesla. I mean, ouch, right? That really hurt. So we've got to think about what are the actual fundamentals? What do the financial statements look like? And we've got to get back to basics. I mean, fundamentals such as earnings per share. I mean, we kind of forget that when we start trusting and knowing a brand. I think the second thing is, what's the resilience? Going through the craziness of the market today, will this company be able to weather the storm? Will they come out on the other side brighter? I mean, I think there's a lot of great leaders of companies today, and you can't overlook that. What is the leadership of the company? And then, and a great example of that, Starbucks. I love what Starbucks is doing with the new leadership, and look at the changes. So I'm not necessarily promoting Starbucks by any means, but I am saying, they were willing to take on a new CEO, and I'm paying attention. And then the last thing is valuation. Do we understand the value today and what that potential value is going forward? Just because the company's down maybe 15 or 20% still doesn't mean it's a buying opportunity.
And so with that in mind, and you mentioned how investors should be evaluating earnings during a season of uncertainty like this, and uncertainty is the word that we're hearing from many company executives, early innings in this earnings season as it may be. We've still got some major tech companies. Next week is going to be a massive week, but this week it kind of continues the thread of what we heard to start off the earnings season from banks and Delta Airlines, most notably as well, with that uncertainty. How should investors be going about their checklist as they're listening in on some of the earnings calls and going through financials?
Well, I think we go back to Warren Buffett. If we don't know it, we can't understand it. We have no business investing in it. So be willing to pay attention. Okay, we've got to be willing to pay attention. Number one. Number two, we have to understand that for some investors, this could be a one swing at bat kind of situation where if you're willing to take a chance on a company or a brand because you know the brand, you trust the brand, and you believe in the brand, this could be a one swing strikeout. So I really like retail investors today, and I'm going to pivot just a little bit and say, don't overlook the simplification of index buying today. I know Warren Buffett's a fan. look at the Vanguard model. At the end of the day, I think owning a basket of stocks that could be undervalued with the brands that you know and you trust, you're not making a bet on one company, but you're really looking at a sector or an asset class. And I think that's the way to play the market for the average retail investor today. Pay attention, but don't overlook the index.
And finally, what are some easily understandable stocks that you believe are well positioned right now?
Well, my family and I would probably all agree. I've got 3 daughters, and my wife and I think Costco. I'm supporting Costco on a regular basis every weekend. Costco has such a tremendous business model, and I think that they're here to stay. They're going to weather the storm. They've got great leadership, and I see their market continuing to grow. Of course, they're going to be impacted by inflation and tariffs and price adjustments, just like everybody else. But they are locked on those corners, and they're not moving. Another company that we can't overlook is Amazon. I think Amazon, everything that they have their hands in today. I mean, I know outside of Costco, that's probably my number 2 place that I'm shopping on a regular basis. So talk about a brand you know, you love, you trust. I continue to be, an advocate of Amazon and what their potential is. And I certainly think there's a big discount on them today. Don't overlook the grocery retailers. I mean, the Kroger company is a great example. In this market, it's easy to be a spec investor, but at the end of the day, people have to eat, and groceries are going to be a continuing necessity. I mean, we're going to shop every weekend, no matter what the tariff talks are, no matter what inflation is. I mean, we might pivot, what brand we're buying at the grocery store, but you're still going.